One, Jesse Webb, Traders Pro. Market conditions, bullish in a bull market, as we have been now for several weeks towards the upper end of this range. Let's look at some of the shorter term indicators. We saw momentum all the way up to the upper end of this extreme yesterday, started to pull back a little bit here. Would like to continue to see a little bit of a pause right here to allow the market to really catch up. Ideally, without any kind of sharp reversal. We'll see if that ends up playing out. Brett didn't move much in the last day, and sentiment also is stuck right here. We did see the buy-sell ratio continue to improve. We're sitting now at it's about the same, 1.21, 1.25 yesterday. So just slightly above 1, still have just a slight bullish bias. We're at the upper end of that sentiment range as well. Again, just the magnitude of this rally and the location that we're at now, as far as new highs and all-time highs and momentum being the upper end of that range, we are certainly are due for a pullback here in the markets. We could pull back on S&P 500 back here to 479, or we could just continue to kind of do what we've been doing this last couple of months, and that is a couple down days or a little retracement, and then we ultimately are working our way back this direction. This is still our momentum direction, and we're snapping to the upper end of this range, meaning this Fibonacci tool, this orange line, is snapping to the highest and lowest trending points on the chart. And so on this 6-month time frame, this is the current trend that we're working with. This is the lowest point of this time frame. This is the highest point. And so this is the momentum area where we could have any really kind of volatility and retracement inside this upper zone and still be in a healthy uptrend. We'll watch to see if that pans out here with the market as a whole. Let's take a look at some sectors. Continuing to see some improvement here in sectors. We are seeing real estate still showing some weakness, but the pattern here is not that bad. It's really trying to hold support right here at this $86 level on IYR, which is the ETF for real estate iShares, and you're seeing kind of a nice counter trend bullish pattern if it does give a little bit of confirmation. So real estate's just the last one really to catch up. Still an interest rate environment. We're still dealing with the fact that the interest rates are still relatively high. Inflation, we're still dealing with that. And so if we look at this bond chart pattern, we're starting to see some support here again in bonds right around this $93 level on TLT, which is the ETF for long-term bonds. Also, markets are going to want to continue to see this bond price holding and moving higher, which means that interest rates are ultimately moving back lower again. If we take a quick look here let's actually jump over to oil, and it's having a decent move still here. With this $71 support range, $73 on the upper range, and holding that support range right here. If it can bump up above that 73, that's a pretty significant resistance area here as well, that 73.5 for USO. If we look at a couple of the muscle stocks today, we've got a handful. If you notice, there's a couple of home builders right in here. MHO, nice looking pattern, retracing. We've seen that with a lot of these home builders as well. We've got LSEA, same story here, nice looking pattern. And ELF, which is a stock that's been continuing to move. It's been a nice stock for the last few years. Decent retracement, and then started this overall uptrend. Looks like it wants to continue that overall trend there as well on ELF. That'll do it for today's update. Everyone have a fantastic day today.